We're 2 hours into the trading session. It is Tuesday, August 17th. Hello, traders. Let's take a look at yesterday's pick. Let's take a look at the market. Let's see what else we can find for today. UPST. That was the long from yesterday. Video came out right about in here. You can see the stock is basically at that same level. Not a great long pick. However, not bad considering what the market is doing. You can see S&P 500 down 35 points from the open. I view this as a fairly bearish opening. Why? Because the market was not able to get into the gap and fill. Previously on these gaps down, we've seen a nice sell-off, a retest, and then look at the rally yesterday. Boy, shorts sure got their head handed to them yesterday, but you can see that there were some tells throughout the course of the day. This was the high of the day right in here. Here we hit a bullish 10P cross. We come up in here. This was what we call a bullish divergence. 10P heading down, down, down. Market actually compressing and holding its own near the high of the day. As soon as we got this little 3 candle release right in here, it was off to the races. So very, very nice. Look bullish. We rallied all the way to a new all-time high. I am pretty bearish today, and I see a lot of news mounting that I don't like. Coronavirus cases starting to increase. China's economy is relatively weak. The PBOC sees the need to ease. So right now, I feel that we've got enough things looming that the market's going to have a very difficult time advancing. And you can see on the daily chart that when we have drifted higher on very light volume, eventually we get one of these pullbacks and it takes us down to the 50-day moving average. If you are a swing trader, that is where you can start to get a little bit more aggressive. But right now, you have to be passive on your swing trades. Day traders, we may have a shorting opportunity. Let's go back to that 5-minute chart. I did want to point this out. You can see that same type of formation here. Float, float, float higher, tiny bodied candles, get through that previous resistance level. Everything looks good. And then seemingly out of nowhere, wham. Now, one other thing that I want to point out to you, and you can go back and check this throughout the course of the year, as we start getting close to the monthly options expiration, I have noticed that the market has dropped like this. I sense that trading firms feel that they can get something going because there are a lot of put sellers out there. And if they can just crack the market a little bit, they can force those put sellers to buy back their puts at a loss just before options expiration. Those moves do not last long. And as soon as option expiration, the monthly options expiration passes, boom, we get this snapback rally. Swing traders, watch the 50-day moving average. Make sure we find support there. The drops have been fast and furious, and then they rebound right away. So look for something like that to happen over the course of the next week, maybe 2 weeks, but I think it's going to happen this week. We're going to see some selling pressure. Let's go into the 5-minute chart and take a look at what the price action today is telling us. Choppy. That's what we should expect for August. Traders are taking time off. You've got kids going back to school. There's not a lot going on in the market right now. You have Congress in recess. You have the Fed not going to be making any statements until September. There's really no news to drive the market. We did have a soft retail sales number today, minus 1.1%, 0.1% increase expected. So real retailers are taking a little bit of heat. They are also on the brink of announcing earnings. So keep an eye on those stocks. But the market has been very choppy. You can see we had a little bit of a rally in here. I did take a short here on that 10P cross, covered the position in here. Why? Because the market's been super choppy and we had support nearby. So I thought I'm going to err on the side of caution. I'm going to take my profits. Let's see what happens. I did try another short in here on this bearish 10P cross. I ended up covering it for a 1 tick loss. So a lot of green and red candles mixed. There's not much going on, and that tells me we're probably not going to see a lot going on throughout the course of the day. Very, very important that you put the current day's price action into context because the market is what drives all of our other trading. What do I see happening the rest of the day? Well, the fact that the buyers could not get into the gap right here is a little bit bearish, not overly concerning. On the flip side, you could say, hey, wait a minute. The bears were not able to test the low from yesterday before finding support as well. So we've got really buyers and sellers paired off. Let's go back into Friday's price action because I had a couple of members post that they really struggled on Friday. They did not do well. And so I had to point out to them, and this is why market context is so critically important. There's your high from the first hour. There's your low from the first hour. What did the market do the rest of the day? It was trapped in the trading range. There's absolutely no market momentum. We are in August. The volume has been extremely light. That tells you you should pare your trading back. Trade less frequently, so you're reducing your trade count, trade smaller size. Right now, we're just trying to nickel and dime the market. It keeps us engaged, it makes us aware of price movement and opportunities. But when we don't get those breakouts intraday like we did yesterday, you have to be very, very passive. So we had some nice things that set up yesterday. We had a gap below the prior day's low. That was good. We had this gap that needed to be filled in here. All right. This is very, very tradable. And so if you're a day trader, you've got to wait for those really nice setups like this. That's not what we're seeing today. We're trapped in that first hour range, lots of mixed green and red candles, probably going to stay in that range today. So keep your trading to a minimum. Let's take a look and see what we've got as far as some stocks that might set up well for us. I'm going to focus on the short side, and I'm going to go into my heavy selling list. I've already got my pick of the day picked out for you. I am currently short the stock. I'm going to click through these, and you can see LOW is a retailer. Nice breakdown below horizontal support here, below the 100-day moving average. It's got room down to the 200-day moving average. So that would be a nice short. TGT, really nice looking short. Look at that relative weakness and heavy selling throughout the course of the day. Hover over the E. Aha, earnings going to be reported tomorrow. So you got to be a little bit careful with stocks that are chopping around prior to earnings. Baidu, super, super weak. Chinese stocks, extremely weak. I think that is a red flag for the market. And there you can see the FXI. This is a Chinese index, and you can see how weak those stocks have been. In fact, China's market is in bear market territory. If we have a global economic recovery going on right now, you have to ask yourself, there's the high from FXI. China's got a 10-month lead on the world in terms of the coronavirus recovery. Why the heck is its market down here that far off of the highs? China is the one that's going to benefit from a global economic recovery. Europe is going to start cranking up. The US is going to start cranking up. China is going to provide all of those goods. Why, if we are in the middle of a recovery, are we seeing that type of a decline in China's market? Yes, the Chinese government is starting to regulate tech companies. That will account for part of this drop. But the bigger picture is their economic news has been very, very light, and we're not seeing that global economic rebound. You can say the same thing for the US. If we are in the middle of an economic rebound, why are retail sales down 1.1%? Why aren't we seeing a nice 3 or 4% increase in retail sales? People are being very, very cautious right now. So let's go and take a look and see if we can find some bearish trades. I am favoring the short side a little bit. I feel that eventually the market is going to test the downside. We have support at 442 on SPY, and I feel that we're going to test that support simply because this has been the pattern. Get that market drop, you get the gap down, eventually you establish support, and then you run like crazy. And it doesn't take long for buyers to come in. They've tried to prop this market up. They've tried to prop this market up. Once they see that we can't get in the gap today, they are going to start pulling their bids. They will be less aggressive with their buys. Why? Because the market's at an all-time high. If you're an asset manager, you don't want to be buying the all-time high, especially when you sense that there might be some selling pressure building. So we're not able to get into the gap. We weren't able to do so early. Here you had an opportunity. Yes, we can add to our positions in here and look at this nice strength. You're not going to be that aggressive today. You're going to wait and see what the market does. So we're going to continue to look at the short side, see what we can find. GM is actually a nice short. Look at that drop below the 200-day moving average. You can see right in there. Chip shortages are going to plague car makers. GM looks nice. Ford also very similar chart. Breakdown below horizontal support. Breakdown below the 100-day moving average. That also looks like a nice short. Zillow, nasty, nasty chart. You can see how the bottom is dropping out of Z. There's your earnings report, horizontal support right there, long red candle, follow through selling, also looks pretty good. I am going to highlight Boeing, BA, as my short of the day. It's been coming up on the searches. I've been short from earlier today. You can see we've got an upward sloping trend line right here visually. We have a breakdown below that upward sloping trend line, and we have a breach of the 200-day moving average. We have horizontal support right here at around the $219 level. I feel that we're going to continue to see some softness in Boeing. So here's the tell. Let's look at Boeing. Let's overlay the SPY. Again, relative weakness is what we're looking for. So you get the market bounces right in here and Boeing gets off the low. Okay, that's nice. Look at this bounce right here in the S&P 500. What did the stock do during this bounce right here? Down, down, down. Now it's on the low of the day. As we have the S&P 500 coming in, we're probably going to be taking out that low of the day. Given that the stock is below the 200-day moving average, buyers will be passive, and you probably are going to get some short speculators in here as well. Travel industry probably going to be hurt by the resurgence of the coronavirus. All the travel stocks, be they casinos, cruise lines, what have you, are starting to see some selling pressure. Airlines also under pressure. So I think those are the sectors that you want to be short. Day trading, you can short. Swing trading, your best play is going to be to wait for that drop to the 50-day moving average right in here. And if you have a 3 to 4 week time horizon with your swing trades, this is where you're going to want to be long once that market support is defined. If we spend a lot of time around that 50-day moving average and you get long in here, I would caution you, you may want to buy those bullish put spreads back, or you may want to exit your bullish positions, because typically we don't spend but 1 day on that low and then boom, we rally right off of it. If we come down to it, we sit there for a day or two, that's a sign that the sellers are still in control and that we may have another leg lower. So if you're looking to buy in here, you want to see an instant rally off of it. Instant rally, instant rally, instant rally. You don't get that. Got to be very, very careful on that 50-day moving average, because everyone right now is in the mindset that when we test the 50-day moving average, we come in and we buy aggressively. If we come down and test it, and you don't see that type of bounce, then we could have a nice leg lower. And everybody that's in here, buy, 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 buy. When you don't get that bounce, they're the ones that are going to be flushed out. When the market breaches it and stays below it, they're going to exit those positions, and that will fuel the next leg lower. I don't see that happening. I watch price action. I don't guess what the market's going to do. I follow price and volume. On that type of drop right here, I'm going to be looking for that instant liftoff. If I don't see it, I'm going to expect another leg lower. So that's some technical analysis for you today. We'll go back into the 5-minute chart, see what's happening. Be cautious in here. I think we're going to test the low from Monday. If we take out the low from Monday, we could test SPY 442. Very choppy price action in here today, though. So watch for a drift lower and watch for that low from Monday to be tested. I think the short side is the one that I want to be playing more today. Giving you some nice stocks to look at. Boeing is your pick of the day. That is a nice short. I think some of the others that I showed you as well, GM, all the Chinese stocks, Ford, they all look like excellent shorts as well. Letter Z, some of the retailers also, BBY. Keep an eye on those. Those sectors are struggling today. That's all I've got for you. Thanks for watching. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.